Welcome to Investors Insights. Our topic today is markets. Here we go again. So as we sat down this morning and started debating all our data and information, really appreciate all the work, I'm sitting there thinking about my favorite quote by Will Rogers. History doesn't repeat itself, but it sure does rhyme. And I'm also saying to myself, after 30 plus years in this industry, here we go again. And that's how we came up with our topic. So on that note, Trey, the markets have been very volatile. We're having a lot of discussions with our clients. This is a situation that we've been in before. Do you agree with me on that?
I'd have to agree with you. It feels different this time, but purely because it's been a while since we've been through this. Going back to 1980, the market has fallen by 10% or more 36 times. This will be the 37th time. So for those keeping track at home, that's nearly one a year.
Right.
So the reason this feels so different is that last year was so smooth. Last year really is the anomaly. This year is kind of the norm. And the reason is because for the first time in over a decade, the cost of capital is being driven by the markets as opposed to central banks. And so as we're seeing interest rates move up outside of the central bank's control, that maybe that's going to lead to a little more choppy markets. And so that's why these things happen on an ongoing basis.
It's a transition period.
Exactly. And so you go through these transition periods, and barring a recession, 1 year after a 15% plus correction, the market is up over 16%. And so on average, barring a recession, we see these pullbacks often, and the market just moves higher afterwards.
Right. Yeah, people forget that we started having government intervention back in 2008.
Right.
And we're now gradually coming out of that.
Exactly.
And so it takes time to make these transitions. And at the same time, though, and Bobby, you brought up a really great point about retail sales coming up, and let's talk about that and the economy, because we're hearing from our clients as well as research saying, hey, business is great right now. So you got the market that's very volatile. So talk about retail sales and that information that's coming out this week.
Yeah, so Wednesday's a big day. We got retail sales. Retail sales have been up 5% in November, December. That's obviously very important. Retail sales and the consumer are 70% of our economy. Also, Wednesday is inflation. We get the latest inflation number. This is very important because inflation has caused the market to wobble a little bit. Higher inflation usually means higher rates. And so with the 10-year being at a 4-year high, if the inflation number is high on Wednesday, that could continue to add to the volatility or even make it worse. So we're following Wednesday very carefully with retail sales and inflation.
Right. So in other words, we could see rates go up higher in the bond market, correct?
Yep.
And what does that do in competition with the stock market?
And that's not necessarily a bad thing. In 2003, the
28.
post-tax cuts, we saw interest rates spike. We saw the market sell off. But as economic growth came to fruition, saw the market rally towards the end of the year. So this is fear of growth. So not necessarily a bad thing.
No, growth is a good problem, and it's also nice to see some inflation back in the picture. If you go back and check our vlogs from a few years back, we were talking about deflation, and inflation is alive and well, and that's okay in many aspects. Because if rates go up, the other side of it is it could impact the stock market temporarily, but also you may see money market rates and CDs go up as well. So on that note, we're going to keep you updated and informed. We appreciate all the calls and emails that we're getting at this point. We like that kind of dialogue and know we want to keep you informed. You can also follow us on Facebook, Twitter, and LinkedIn. And I encourage you to do that because we post different things, different types of information there as well, so you can see some of the pieces to the puzzle that we're looking at. So have a great week, and we'll look forward to talking to you soon.